Hi traders, Falbros here, market analyst with FOREX.com, and following the collapse of oil prices on the back of the US-Iran deal, we've seen equity markets push further higher, but that sentiment hasn't been reflected in the FX space yet, with the US dollar largely holding on to its gains and not moving lower as one would have expected. But could that change this week with the Fed and other major central bank meetings coming up? Thanks to weaker oil prices, the German DAX index has extended its recovery following the formation of a large bullish engulfing candle on the daily time frame on Thursday of last week. Since then, we've seen some further upside follow through, which is always a positive thing to see. The index is now back above the 21-day exponential moving average as well as the 200-day moving average, and it's making higher lows as well, as you can see on this daily time frame. It's not very far off the record high that was hit earlier this year, and I think from here that is the next upside objective at 25,512. We've tried to break through this area a couple of times in the past, each time the index coming very close to breaking through that level but failing to do so. Will it be third time lucky? I think if we can establish a base now around the 25,000 level, it could take that record high out at the next time of asking and potentially head towards the next psychologically important level of 26,000, and then potentially the 127.2% extension of the last major drop. In terms of support levels to watch, the trend line is obviously very important. We have the 21-day exponential moving average also coming in to play at around 24,700 or thereabouts. Below that, we have the high from last Wednesday's candle at 24,500-ish, which was taken out during that big rally we saw on Thursday of last week. So that level needs to hold really to keep the market supported. If we see the index go below that level, then things could start to turn a little bit more bearish once again. So far, the oil price weakness hasn't really helped the euro-dollar exchange rate in the way you would have expected. But at the time of this recording, prices were coming out of this falling wedge pattern, which is a bullish technical indication. Price was testing resistance at around 116 to 116.25 area, where we had previously seen lots of support before the exchange rate broke down on this particular day. But now we are back to the same area once again. So if the euro dollar can break away from this key area of resistance, then the next upside target would be around the 116.70 to 117 area, where we have the resistance trend converging with the 200-day moving average and price upon resistance. So there's still a bit of work to do from a bullish point of view, but the slump in oil prices is certainly a positive development for the euro and indeed for other currencies where the economy relies heavily on energy imports. For that reason, I think the path of least resistance on the euro dollar is to the upside, and I'll be very surprised if we don't see a break above the resistance levels I've mentioned in the days and weeks ahead. With geopolitical risks being priced out of the markets, one currency pair to keep an eye on is the Euro-Swiss. The Euro-Swiss here, daily chart shows a bearish trend line connecting the most recent highs, and that trend line is being tested or has been tested in the last few days, where we also have the 200-day moving average converging as well. So we're on the cusp of a potential breakout here, which could then pave the way for further technical buying above these technical indicators, with 93, 94, possibly 95 being the next upside objectives if the bullish breakout can be sustained. But first things first, let's see if that breakout will happen. As I zoom in, you can see that price has been consolidating below the 200-day and above the trend line for a few days now. Short-term support comes in at around this level right here, 92. Below that, we have this level right here, which was previously resistance on a number of occasions, as you can see by the wicks of these candles, before we broke through it. That level is the line in the sand insofar as the near-term technical direction is concerned for this currency pair. For as long as this level holds, I think the path of least resistance is to the upside. But ideally, I wouldn't like to see rates come all the way back to this level. And instead, if we can see continued consolidation here for a couple of more days, or ideally a bullish breakout soon, I think that would be quite a positive technical development, in which case the initial target would be liquidity resting above this high of 92.70, and then round handles like 93, 94, 95 could be the next upside objectives. But first things first, let's see if that breakout happens, and then we'll take it from there. Thanks for watching. Don't forget to like this video and subscribe to our YouTube channel. I'll see you in the next update. Take care.